To work today is I'm basically going to use this as a base, but I'm not going to work through the questions. What I am going to do is I'm going to work through the questions and what possible things most possibly is going to be there. Then I'm going to work through the formats, and then if you have specific questions about this specific question, I'll do that calculations. Okay, but I'm going to work absolutely according to your needs. Right. Okay, so question 1, like we did in the video before certain people switched off the power, I said, question 1, they can ask you an income statement, a full normal income statement. But the thing is, it won't be as big full income statement as like grade 11. It would be less adjustments, and they would give some more printed information. The second one they like to do is they like to ask you the wrong net profit, and then you need to fix it. So you need to do opposites, ne? I think that's the one that we really need to look at. Then they ask you the face of the balance sheet. Now it really bothers me that you guys, you're not comfortable with the balance sheet. And that for me is a problem, because the balance sheet is actually extremely user-friendly. So I would want to solve that today. Okay? Then they like to ask notes. Now your favorite notes that they like is note 3 for fixed assets. And I can promise you, if it's not in question 1, then note 3 will feature somewhere in question 2 with the cash flow. Right? The same goes with the ordinary share capital and the retained income. You will definitely get those 2 notes. Not necessarily to do. They can also ask it as a calculation, especially the ordinary share capital one. But it will either be question 1 or question 2. You will find it. They will be there. And then, of course, your notes for receivables and payables, they won't necessarily ask you to do it, but they ask you to do the calculations in the face. So you need to know those ones. Okay. And then, of course, your fixed deposit and your loan, and the difference between the short part and the long part. Okay, now let's quickly look at the wrong net profit. Now remember, if you think of your income statement sales less blah 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 blah, and in the end I've got net profit after tax. Now what they would usually do is they will give you net profit before tax. Okay? And then they would tell you, oh, this amount that they give you here, it's wrong. Okay? And then they will tell you, okay, the tax is so much. So your answer sheet would look like this. It would have net profit, the wrong net profit before tax. Ne? They will give you an amount here, right? And then they will say tax, net profit after tax. And you need to go calculate these things. So what now important to remember is they give you this amount. And how did they get to this amount? They got to this amount by saying your gross profit plus income less expenses. And it doesn't matter now about if it's an interest expense or if it's a debtor's allowance or that doesn't matter. The fact is all your income was added to get to this, and all your expenses was subtracted to get to this. Okay, so now if I need to reverse it, I need to go look quickly. So the first thing I need to remember is my income leads to my net profit to increase. So anything that makes my income more will make my net profit more. And anything that makes my net profit less will make my net profit less, if it makes my income less. So now let's quickly think my adjustments. Accrued income makes my income more. And because it makes my income more, it will make my net profit more. Income received in advance makes my income less. And because it makes my income less, my net profit, which is the ultimate income, will also be less. Okay? But now you have to be very sure. When they give you your transaction, do they give you that this adjustment wasn't taken into account at all, or this income was not taken into account at all? So they will say, for instance, I'm not going to give you an adjustment, I'm already going to give you the answer. So I'll say to you, they will say, trading stock, they will give you an adjustment and you'll get like a trading stock surplus. Now that has not been taken into account at all, né? So it means it will make your net profit more, right? Or they can give you something like that, rent income, 10% increase, blah, 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 né? And then you get like 1,000 rand. Then what it basically means is when I did my income statement, right? The amount I showed for rent income, 11,000, was 1,000 rand too much. Ne? Because now I work out my income received in advance, 1,000, meaning that rent income was supposed to be only 10,000. So meaning my income is actually supposed to be less, so my net profit would be less. Can you see the difference? The one is an adjustment that wasn't taken into account, but it's not shown in my income statement also. That would be something like depreciation wasn't taken into account, the trading stock deficit, trading stock surplus, the provision for bad debts adjustment wasn't taken. Can you see that's things that's usually only adjustments. Then the other scenario is the income was taken into account. So they did show rent income, they did show the discount allowed, received, they did show the bad debts recovered, but there's a part of it that they didn't take into account. Okay. So the same now goes with expenses. So what is expenses? Expenses in the end makes my net profit less. So you're going to see expenses is going to work the opposite way around. Okay? So in other words, if I have an accrued expense, an accrued expense makes my expenses more. Now, because expenses actually makes my net profit less, the more my expense becomes, the less my net profit. Does that make sense? You guys must talk to me. It's only Poppy that's talking. Are you guys sharp? No? Okay. Now, if it's a prepaid expense, what does a prepaid expense do? It makes my expense less. Because what is a prepaid expense actually? A prepaid expense is I've paid this expense and now I'm dividing it between the part that's applicable for this year and the part that's applicable for next year. Because I'm going to show that expense, but I want to show it against next year's profit. Okay? So now, if I have already done the income statement, it means I added the full insurance as an expense. And now I say to you, this little part is not part of this year's expenses. So, can you see it's going to make my profit more? So, you guys can just have this little thing in your head that when it's an income that's at play, the signs work, the net profit signs work with the income signs. If the income becomes more, the profit becomes more. Income becomes less, profit becomes less. Okay? But the expenses works the opposite way. Okay? So in other words, if the expense becomes more, the profit becomes less.
But when the income becomes more, the net profit also
becomes more. Yeah. So, because net profit is actually, if you think about it, it's a surplus income. Ne? Okay, so are you guys with this? Okay. Now, so that's the first thing they want you to do. The other thing they want you to do is to get this tax. Now, when I do tax, so tax consists, the income tax that's here, is if they tell me my net profit and the percentage income tax is 30%, right? That's my income tax. Okay? Now let's say they say that is 70,000. Okay. So the one way they can do it is they will tell you it's 30%. So now you get your net profit, the right net profit before tax. Ne? Then you work out your tax as 30% because you know this is 100 and this is 70. The other way they can ask it, which they also love to do, is they will give you the net profit after tax and then you have to reverse it. Okay? But the other way that they also love to do it, that always catches you guys, is what they will do is they will say, they will give you in the trial balance, they will give you such income tax, ne? And on the debit side, it will say something like 68,000. And what is it? Because it's debit, it means this is what we already paid such. This is my provisional payments. Ne? Remember, we have to do 2 provisional payments a year. Okay? So now what happens? Now they have here in the additional information, they say to you, we owe, or the company owe such 2,000. So what does it mean? I already paid such 68. We still owe such 2. So my income tax is 70. And must I go again? So if I draw the T for such, the T for such says at this stage I've got a balance 68. So whatever I'm going to owe, ne, I already paid 68 of it. Okay? Now what we are used to is we calculate our income tax and we calculate it as 70, and then I see I've got a balance CO, balance BD of 2. And I know, where does that 2 go? Oh, that 2 goes to the face of the balance sheet, ne? Under current liability, such income tax 2,000, because that's what I owe them. But now, what did I say to you? When we are doing this fixing of the error, ne? Now we have here tax, and they don't give me the 70. I'm looking for the 70 because that's the one that goes to the income statement. Ne? So now they give me the information. They say to me, Sash has got a balance of 68. The company still owes Sash 2,000. So they give me that. You guys see? So they give me what I already paid and what I still owe, which in turn will tell me what my income tax is.
So it's the total.
Yes. So always remember, in the income statement, the tax is what I'm obliged to pay over to Sash, the total amount, right? The balance sheet. So this is the real tax that I am owing Sash. Yes, ne? Whereas the balance sheet is what part do I still owe? Sash or Sash owe me? Ne? If we owe Sash, then it's a current liability, that part. But if Sash owe us, then that part is a current asset. So can you see this one here in the balance sheet is usually a very small amount in comparison to the income tax? Because you've basically tried during the year, your whole purpose is actually to pay everything as close as possible to what I'm going to owe. Does it make sense to you guys? You are very quiet. Sure. Okay. So, in other words, what am I saying to you? They can either give you, there's different things. So, in the end, your income tax. Your income tax is the net profit before tax times the percentage tax. And that one goes to the income statement. Right. So they can give it different ways. But you know that this income tax in the end is, if we owe SARS, so then it would be what the interim, what is the interim? It's the SARS balance in the trial balance, right? Plus what we owe to SARS gives me income tax. Or it's the interim I already paid less what SARS owe us. In other words, I paid more than what I owe. Ne? Then that gives me the income tax. I wrote it very weird. But you guys get what I'm saying. So they can either give it to me by giving me how much I already paid, how much I owe, or SARS owes me. Or they can give it to me as a percentage. Now when it's a percentage, I always need to remember, in my income statement, I have net profit before tax gives me net profit after tax. The before is always the 100. 9 out of 9.2 times the tax is 30, which gives me net profit after is 70. So now if they give me the tax, I can work out either one by UK. If they give me this one, I can work out this one. If give me this one, I can work out that one. You just remember unknown over known. You guys sharp?
Yes, sir.